Good morning, everybody. Welcome to the Flow Show. Another day begins. It's Tuesday, the 25th of November. And, well, I would say things are a little bit quiet, but there's a bit of movement going on in some of the pairs and some assets. So we've got something to trade at least. We're seeing a bit of a pickup in sterling options volatility as we head towards the budget. A few nerves coming in, perhaps, a bit of squaring, repositioning, de-risking, whatever you want to call it, coming in ahead of the budget. It's crunch day tomorrow. Morning, Kay. How you doing?
Morning, Ryan. Yep, doing fine, mate. Thank you. Good morning, everybody. Yeah, I mean, logic, that those sterling options vol increase, the downside risk reversals, highest since a good number of years. So, yeah, the market is really looking at this budget to probably pick a side for the next few months in the sterling, if it can already.
Yeah, that remains to be seen. It's going to be a jumpy one tomorrow. I can tell you that.
Oh yeah.
Yeah. Right. Let's get moving. While we do that, I'll get myself ready. Just want to remind you that we do have a 30% sale off our TFP programs. That's all plans. We do instant funding accounts, and we also do assessment accounts. Use code THANKS2025 to take advantage of that. I've put the link to the TFP in the Zoom chat, so you can get access there, find out all about it. You've got any questions, there's a chat function there as well. You can ask away, find out if it's the right program for you. So get on that. That runs until December the 2nd. Excuse me. Right. Let's get into the headlines. Over in China, Xi fancied a call with Trump yesterday, so they got on the blower and had a little chat. Nothing much important came from it. Xi said that US and China relationships maintains a positive momentum and they should expand their list of cooperation. Xi also clarified China's position on the Taiwan situation, saying that the return of Taiwan to China is an important part of the post-war international order. This likely all tying up with Japan as well, because pretty much after that, straight after that, Trump had a call with Takaichi, saying that, well, she said that they spoke to Trump at his request. He affirmed the close cooperation between Japan and the US, and then that Trump had briefed her on his call with China's Xi. So this is still rumbling on behind the scenes, this China-Japan spat, and it looks like Trump's now getting involved in that. I spoke yesterday that China had looked to restrict flights into Japan in December. Apparently they've asked airlines to extend their cuts of flights to Japan until March. So, as I said, that's rumbling on. Finance Minister Katayama has apparently established a Japanese version of a Doge department, which they're going to use to abolish ineffective subsidies. We'll see how that works out. I think I read a story yesterday that came out over the weekend or something that Trump or the White House has got rid of their overall Doge department. They're still running little operations in various offices, but the main thing has gone apparently. But I haven't had confirmation of that.
I think 8 months or so before they were supposed to stop their operations, they've been disbanded. The Katayama thing is actually not that new. I think a few weeks ago they were already looking at some kind of the creation of a department to abolish unnecessary spending, etc.
Yeah, exactly. But more important news, Takaichi is apparently going to spend 1 trillion yen on SME, small, medium businesses, wage hike support. However, that takes shape. So she's planning some money into getting wages up. She wants wage gains that are comparable to last year's, which is obviously a big part of everything going on over there. Japan was on holiday yesterday, so we didn't get the BOJ's yen index. That's up. Unsurprisingly, to 75.64 from Friday's number of 75.13. So all this news last week has potentially kept the wolves from the door in terms of intervention, as long as the yen keeps heading the way it's been heading since those highs. We had a bit of data out from Japan as well. Some, I'll find it on the blooming calendar. Where is it? Why is it not there? Am I even in the right date? Yes, Tuesday. Not seeing it. Anyway, we had some nationwide department store sales for October coming out year on year, up 4.3% from a prior 1.4%. Tokyo department store sales were up 3.7% from a prior 2.5%. So some healthy numbers coming in there. France, they must be getting jealous that Reeves is taking all the budget headlines and all the press, because we had French PM Le Cornu saying that there are signs of tension regarding budget talks. Could we be heading for yet more resignations on the revolving door at the Prime Minister's office? It says there's still a majority in Parliament which could vote through a budget, and they're going to hold further meetings with political groups in the coming days about the budget. So maybe that's all going to blow up once again. ECB's Nagel was waffling on, saying the current level of the euro is not a cause for concern. It says we will see more clearly if the monetary policy stance remains appropriate when we get the December projections. Speaking of the clown show, UK's Reeves. This is the first thing I saw this morning when I opened my peepers, and well, spitting feathers. She's apparently asking banks to praise her budget plans. Pretty much, she could hit them with taxes as well, but she wants banks to come out and say she's doing a good job. I mean, this is desperate times now. That was reported by the FT. Meanwhile, another budget U-turn apparently from not looking to put on higher business rates. She's now going to apparently hit supermarkets with higher business rates, which of course will be passed on to us shoppers, which of course will bring inflation. So this is all building up again into something a bit negative. Fed heads, we've had Waller out. Says since the last Fed meeting, available data suggests not much has changed. That hasn't stopped him for pumping for a rate cut at the December meeting. It says January will be tricky with a flood of data coming to indicate whether another cut is appropriate. It says we need a meeting by meeting approach. It says we still do not think the labour market will turn around in the next few weeks. There's no anecdotal evidence that firms are about to go on a hiring spree. Also dropped in a little note that he's had a good conversation with Besant. Waller is obviously, as we know, in the frame for the top job at the Fed. Fed's Daily says she supports a December cut because she sees a sudden deterioration in the jobs market as both more likely and harder to manage than an inflation flare-up. Now, this actually, she's not a voter, but this actually got markets moving because it was pointed out that she usually falls in line with what Powell does. And this is maybe a bit of a departure from that. Powell not giving anything away, but he says it's not a done deal that they cut in December. And so the market had a little bit of a shift on that. Kay, once again, these Fed heads, they're all coming out with enough. Why do we have a blackout now? They're all telling us what they're going to do in December when usually they're supposed to keep quiet and, not say anything until we get the announcement.
Yeah, they should extend the blackout period.
Yeah,
well, they all want to press through their views. You know what? There's a bit of psychology going on there as well. We know that all this pressure from Trump and Besant and Hassett and you name who is in that Trump administration onto the FOMC's heads. They just feel like they have to justify each other. The problem is that they do it every day, twice a day, which is really getting. I mean, the whole effect is blowing away. Yeah, I mean the market reacts to it, but then reacts to it for how long? 5 minutes, 10 minutes. couple of hours. It's what is filtering through door is that it's going to be an extremely close call on the 10th of December. I was just putting in the room this morning because we have been figuring out, as we do in our room all the time, figuring out what would be or who would be voting how. An interesting one for tomorrow maybe is that Jefferson lately commented that he was going to have a look at the beige book. He could be a cutter, but imagine that beige book comes out tomorrow very positive. He may swing to the other side again. So I still think it's going to be an extremely close call for what's happening in December.
Yeah, very much so. And we're not going to get any clarity because, they'll soon be entering their blackout period, and then we won't hear anything. But until then, they're all coming out and shooting from the hip. Right, over in the Russia stuff, Trump tweeted last night that something good just may be happening. He says, don't believe it until it happens, but we're on the path to something happening. Zelensky, he confirmed that his delegation that have been in Geneva for these talks with the European side, they're over, and all his delegation are heading home, and that they're going to look over things, and we could hear something in the next couple of days. On the Russian side, we had a Kremlin aide speaking, saying many provisions of the US drafted plan seem acceptable. Then said some provisions of the US plan require detailed discussions. And said that European counter proposals on the plan seem at first glance completely unconstructive and do not work for Russia. This is the bum fight going on. Russia Foreign Minister Lavrov expects a peace plan after the US agrees it with Europe. So there has been a little bit of movement. They've gone from 28 points to 19 points on the plan or something. But there's still there's more negotiations really between US, Europe, Ukraine than there probably is with Russia at the moment. And once they get to something, then they can take it across to Russia. In the meanwhile, Russia's Novak says Moscow and China, or Moscow and Beijing, are discussing boosting Russian oil exports to China because of all these sanctions put on. So even while they're trying to talk friendly, China's still helping their old mate out and helping them finance themselves as well. Right, the data, that's becoming an absolute shit show, to put it bluntly. We were due some numbers tomorrow. We're not getting those numbers, GDP and the likes. That's all been booted to December the 23rd, 2 days before Christmas. Well done. Again, it's after the Fed. So that's GDP and a few other numbers as well. We are due, supposedly, to get, I think that retail sales has been booted as well. I can't recall. So we might get day to day, we might not. It's a guessing game. That's what we're going to be playing today anyway. So we are supposedly maybe going to get PPI and retail sales from that. But who knows? Toss a coin. You might be lucky. We will get this housing data, unless it's all impacted by government offices and whatnot. I think industrial production data has been booted as well. We will get the consumer confidence because that's the conference board, and we should get pending home sales. Yeah, we'll get that. Yes, mate.
Yeah, I was wondering about the consumer confidence.
Yeah, because that's conference board. That's a separate entity. Yeah. And we'll get the pending home sales, I said. But as for the rest, but let's just keep it lucky dip. Just watch the calendar, watch the clock. If we get it, it's a bonus. I'm not going to go chasing around these clowns. I have enough with my own lot over here, the ONS. Been able to get the right data out. I'm not worrying about the Americans. Right, anyway, that's it on the headline front. Not too much going on. Kay, any news you spotted?
Well, that consumer confidence is always a number we can see a bit of a wobble on. And then next night we've got the Aussie CPI and the RBNZ, and the combination of both could be a bit hot when it comes to the Asian time zone, right? So that's going to be one to watch for those who are up. I won't be.
Yep, me neither. I can get on with it. We're going to have a long enough day tomorrow as it is, I fear.
Yeah.
So have a look. Right. So what are your expectations for the RBNZ? Do you think this is their last cut, or are they going to leave the door open?
Yeah, I would suspect so. I mean, one more cut would bring them to 2.25%, if I'm not mistaken, which is kind of right above that 2% mark. That's right. Running around a lot of central banks where that would be really accommodative, etc. So they probably will announce a pause. Now it depends whether this pause is a hawkish pause or dovish pause. The RBNZ of late have been dovish, right? Because they were constantly warning about GDP not doing well, economy not doing great, so that they had to support. So that's likely going to cause that last, or maybe in this round of easing, the last cut. And I've seen quite a few commentators from that zone, not like Twitter or whatever, but the banks in the area saying that since it's the last cut, it may be a neutral to hawkish cut, and they see actually Kiwi maybe rebound a bit from there. But a cut is still a cut for me. If your economy is not roaring, why would your currency all of a sudden do great? But okay, I mean the most of the calls were that Aussie Kiwi may have ran its course, and they see it go back down to 114, 113 or so. But yeah, I'll leave that in the middle. The only thing that I see is that regardless what anything else does, Kiwi dollar is remaining very weak right now.
Yeah, and that Aussie Kiwi is holding up quite well as well.
Yeah.
It's not looking like he wants to fall out of bed anytime soon, which keeps further upside in play. Yeah, I don't know whether to leave a little feeler out on this one. A bit short into that 115.90 area. Stop above the highs. See what happens.
Yeah, you do have a double whammy potentially. Yeah, if the Aussie CPI all of a sudden comes in weaker, with an RBA which have been really reluctant to cut, which is still relatively high at 3.6%. If you see all of a sudden a lower CPI, indeed your Aussie Kiwi could actually get a slap, even with RBNZ cutting. If in turn you get a sticky CPI in Aussie land, your Aussie Kiwi is probably going to break above 116 again, and maybe not stop before 118, 119 or so.
Yeah, it could well be. But yeah, I'll have a little think about that. I'm not overly keen
just stay up.
No, sort of.
Come on. A bit of dedication to the cause, mate. Come on.
Listen, I'm going to have to sit through that clown tomorrow, so I'm not doing that on 3 hours sleep. I can give you a clue, otherwise my screens will be going out the window. My fish can trade. I can trade it off the screens because that's where my screens will be, in the pond. Anyway, right, before I get into a real rant, so yeah, might have a little dabble in that Aussie Kiwi. We'll see how I think about it. One thing I am concentrating on is euro sterling, because we got this budget. I'm likely to reduce my positions right down. I'm not going to give it up everything. I've still got some bits on from low 86s, so I'm not entirely in need of throwing everything out. But I think there is still a risk that we see the pound gaining a little bit tomorrow. Now, we've been banging on about this. There's really two sides to how this might trade. Okay, you've got, firstly, let's call it the fiscally responsible side. That's what the bond market is looking at. It does, but it doesn't really care in the first instance whether tax cuts, tax rises, whatever has an effect on the economy. It wants to know that the country's got a solid financial footing. That's going to be the initial reaction in the market to this budget. So that's one trade in terms of yields and the pound. The secondary trade is what the press and everyone else makes of all her measures and what that means for the economy. Okay, that's where things might change. You know, if the bond markets are happy with the fiscal stance, then you see yields come down and the pound rallying. If a few hours later everyone goes, well, that's great, but this is crap and the economy is going to suffer and the Bank of England's going to have to cut rates 20 times, then that's a different matter altogether. So there's two aspects of trading this, and you've got to understand what comes first and what comes second. So in that instance, I think it's possible that we see the pound gaining if it likes the fiscally responsible stuff, and then if it doesn't like the rest of it, we see the market flipping. Over what time frame? Don't ask me. Probably a few hours or a couple of days. So I'm not going to give up my short pound position because I'm happy to trade it for the longer term and the mess that is to come. But I will prepare in case we see the pound gaining. I think if I get anywhere down, maybe this 87.20. I don't know why I'm in this one. It's going to this one. Yeah, I'm probably not going to touch it anywhere in here. But if we get a big move and it's down to 87.20, then I'm going to maybe think about adding to my long position and building back up again. Obviously, anything down in the 86s will potentially be even better. So that's the way I'm looking to run it into this budget. I'm only really going to trade the pound through this one because I think it's one of the cleanest at the moment because Europe's doing absolutely nothing. So there's no real volatility on the euro side. In fact, euro dollar vol on the 1 month at the money is down at 5.5% currently. So that's moving back into very quiet territory, hence why we're seeing that really tight range in euro dollar remaining. Kay, what did you do with your euro sterling? You got out, didn't you?
Yeah, I got out yesterday above 88. Just I didn't want to how should I say? I didn't want to have the stress of whatever happening moving down a big figure before it rallies again. But I'm as I said in the room, could be a case of 3 waves coming there. First wave, it's crap anyway, and then all of a sudden, since the market is short, and with all those risk reversals ongoing, people buying sterling all of a sudden, and we go higher than where we started in the sterling. And then the third wave, I think, is when the dust settles. After all, I still have a hard time to see that it's going to be good for the UK. It's going to be kind of it's not really a labor budget. You could Starmer called it that way. I wouldn't call it that way exactly because it doesn't protect the worker too much. But yeah, it's a bit the reason I cut is that, well, first of all, it was part of the plan. I said, well, sterling under the cushion till the day before the budget, and then we see a bit of correction, and we're actually seeing it in a way in the cable. But then I will probably also trade only euro sterling because the day after, and we are in end of month, and the day after we have that US Thanksgiving where the liquidity in dollar may be a bit ish. So yeah, my instrument of choice will be euro sterling as well. The cable, I think. Oh, sorry. Yeah, cable. I think I don't know, but we could going into the budget. Maybe closer to 132 than 131, and I don't know. I've got this kind of impression that those short coverings may not be completely done yet. The thing is, though, if we see and if you go maybe a little tighter than the 1 day, from end of October, we have been in a 130, 132 range, and if you trade cable, that's the one that's going to have to give 130, 132. If you start a trade outside, then I guess we are going to be in for a bit of a more trendy move, whether it's up or down. We will see how the market, and especially the gilt market, and that's going to be really the driver for sterling is going to react.
Yeah, yeah, very much so. And then I suppose we need to look on the other side as well. You know, if the news is bad on all fronts, this thing's probably going to be up through
Oh
those
yeah,
prior highs and up
oh yeah,
towards 89s pretty quickly.
yeah,
Hence why I don't want to give everything up on my position. I've got
yeah.
enough margin in it to play around.
I'm probably going to. If it, I'd actually, ideally, we would have a bit of a shakeout in euro sterling and a bit of recovery in the sterling more today. And if it goes really low enough on the euro sterling, I might already have like just a chip on the table and see what happens. Yeah, 87 and a half, 80, 88, 20, 30 is the first range. I guess we will have to watch, but we'll have time to look at that tomorrow. I think the budget is 12:30.
Yeah, 12:30. So
Okay.
yeah, we'll have a quick look. We've talked it to death already. So, but
Yeah, exactly. Yeah.
we
And
never
we are
know what
still in
happens
that
between now
range,
and then.
and we are still in that range above the prior break zone. So in essence, nothing much changed. And I've got I don't know, but it's for weeks now. I've got this sneaky feeling somebody is trading a very big 88 in euro sterling because we can't go more than 20, 30 points outside of it, and always coming back. I don't know, maybe somebody put like a very big 88 on that's not reported on any of the reports, and trading around that. It does look like it.
Yeah, I actually looked at that last night because we had those reports that there are some big option plays going on into the budget. But I've looked at the expiries for the rest of the week, and there's nothing there,
Yeah, but
nothing major of note there.
not everything is in those reports, huh?
No, no. But I think those numbers were reported to the DTCC, so they were official numbers, if you know what I mean. But yeah, I thought that we might see a couple of lumpy expiries, maybe Thursday, Friday, but no, nothing on there. So I don't know when they're rolling off.
Mm.
Maybe they're capturing the BOE after or something. Who knows? Anyway, let's move on. Dollar yen. That was very interesting. Yesterday, I managed to get scared out my shorts by tightening my stop to 157.15, and we had a high of 19 yesterday. So I got pinched out, but I got back in last night because I think this is. It's looking now more like we've seen a bit of a turn in the yen. Whether it lasts, I don't know, but yeah. So I got back in last night, pretty much the same place I got in the first time round, 156.94. But it's been significant that we've had this little move up, didn't last. We're back below. We're holding, and now we've seen a new low made, breaking last week's low. So the pressure is on here now. I think we're going to shift more away from the yen into the dollar side of things. So on that basis, if we get maybe an undovish stay on hold at the December FOMC, this could be rallying up again. But that'll be a dollar thing more than a yen thing. But it definitely looks like some steam's come out, as I mentioned, that yen index jumping, unsurprisingly, given that move off the highs in a lot of yen pairs. Really, we got some levels, 156, 155.90, against some of these highs and a bit of action around 50s, 40, 50, 20s. But really, it's going to be about this 155 level for me. It was a decent level on the way up again, and we've held above it. So that could be a little bit of a maker or breaker for this move up to the 158. But as you can see, the 38.2 of this move from September is way down at 153. So we've got a lot to do to turn this trend around wholesale, but there's some key levels on the way to that. So, mate.
No, I was just saying, have you seen the overnight comments? Because we have a new yen watcher there. Japanese growth
Oh,
strategy minister Kiyuchi said
yeah,
that he's watching FX moves with urgency and monitoring speculative FX move closely. That's usually that's the MOF coming up with such a line to watch the speculation moves. That may be helping. And by the way, I don't disagree. I mean, I usually am not a yen bull by any means, but it does seem that they are succeeding in stopping the rot a bit in yen there. It's quite interesting.
Yeah, very much so. I mean, it's, you know, we saw the turn coming. We know what the package is. We know UADA's talking a bit more hawkishly. We know some of the BOJ members are now jumping into the hawk nest. Yeah, I mean, I'm still not expecting this to drop 1,000 pips, but just we might just see a period where, as I say, yen weakness is a bit harder to get, and if we can't go up, if these pairs can't go up, there's only one way they can go. But yeah, but as we know, this can change in a heartbeat. We've had that since the Fed, since Takaichi came in. So there's plenty of drivers for this one, but yeah, I'm for the moment I've got a short bias in yen pairs and dollar yen, and I'm going to stick with that. Right, last one from me before I hand it over. Dollar CAD, that's still staying in the running for a crack at these highs. It's plodding a bit, it's grinding. It's not really doing an awful lot, but it's maintaining this upward move. I think this could be something that goes to the clock. If we go a few sessions and we haven't broken it, it's likely we then see a bit of a steeper pullback. If it's getting back under this 140, 80, 90 area, it's potentially going back into this malaise, and then we might see a bit of ranging. But if we do get a move above this level here, 25.30s, I think we're going to have a crack on the highs. And we've still got some pretty decent levels just above. Let's stick it on a wider, clearer chart. This is the 50 of the year's move. So it's going to be pretty important up here as well. And there's a bit of a level in there, as you can see as well, around the 50s. So these highs at 40s, 50s, and into there at 60s is going to be a big old test. If we clear that, there's not an awful lot until the 142s and even higher. So you may be talking, 142.40s before you see a decent level. So this one is still in hunt. It's been a fairly positive trend off these lows, and it's maintained it every step. You've had the pullbacks, the trend refreshes, and it's moved on, refresh, moved on, refresh, moved on. So it's technically it's working out very well for the upside, but it always has some hurdles it's got to get over to keep going. And this one up here is going to be one such hurdle. Right, Mr. K, I'm going to whack it over.
Okay, I'm going to share something which we don't often look at, but I think is interesting to note. And I must admit it escaped my attention for a while because I was short dollar China before, and then I gave it up just because it didn't want to go. We are trying to break those lows. PBOC has again fixed their dollar yuan a bit lower, and the CNH market is catching up with those fixings. We're actually trading extremely close now to the fixing, the PBOC fixing. But all in all, we tried to rally again, but finally, since November, it's starting to show signs again that it could go. And I think the market, while I don't think there's a big piling into Chinese markets, I have the impression that the market is looking at the Chinese yuan a bit more positive. So I wouldn't be surprised if we see a bit of a move, maybe a slow grind lower down into the, maybe even have a look under 7 for year end, for as long as that 715-ish, 715, 716 caps. Does look to me like there may be a bit of a bit more legs in this move. So I'm going to be watching for any small rally in this, maybe to give it a go again. A euro dollar, nothing to say there. It's really just don't forget that with Thanksgiving we are now trading the dollar. The dollar value date is Friday, which is end of month, right? And so we could see a bit of flows coming in this afternoon. I actually think that if you look at what the euro is doing, it may be that those are a little a bit of month-end flows already in the mix, just because of the value date and perhaps in the cable as well, or even the dollar yen moves may already be linked to that as well. But just bear them in mind. Okay, the models are not calling for dollar selling by any means, but that will be a problem for the 4 p.m. London fixing. But in the meantime, as we can see, we are in very tight ranges here. Okay, that 40-50 zone already on the euro dollar, capped again yesterday, banging our head against it again today. But for as long as we don't break really outside of, a start would be 115 50 60 here, or again 115.05 114.90. I wouldn't look for too much, right? It's really in a very tight range, and just watch what those fixings will do. Okay, and then as we you already looked at the cable. I've got a half interesting trend line, although it's a bit steep for me to really pay too much attention, or to bank my trading on it. This is around 131 55 60. This trend line on the cable. If you want to have a look at certain times of the day, I'd be looking a bit at the clock as well to see what happens. Maybe around midday, 1 p.m. our time here, where we strand in the cable. Maybe a bit of an interesting zone to watch. One that we have to look at today, because since yesterday it's made a move, is this Euro Swiss. And finally, it is important enough to note, because this is ages ago that we broke a serious resistance in Swiss, right? Usually, by this time of the year, if you look at especially starting 2022-ish, we have seen those big demands in Swiss franc coming in for the year end. Okay, I'm not saying it can't happen again because of the shutdown. Maybe flows are being delayed, etc., etc. But we are end of November, and I let you do I let you find out what I mean exactly. And we saw it here end of 2024 as well, when those flows may have started, etc., former years, but it's not doing what it did. Again, can still come, but this is interesting in my opinion, especially as I said that Euro Swiss has had utmost difficulties to break resistances and prior highs in the past, and we are. So 92.90 figure on the Euro Swiss, pretty interesting, I would say. If we get a retest, keep a close eye on what's happening there. If it goes back below, yeah, the party will probably be over already. But in the meantime, this is looking interesting. So if you can keep this break here, I would not be surprised to see Euro Swiss continue to push, and perhaps have a look at what was happening here. We had those several moves: 94.40, 94 and a quarter, 94.40s again, and it is the just around 94.20 is the halfway move of the whole decline that we saw over the course of 2025. Okay, that's the 50% up here. I should change that number so it's becoming visible. Here we go. It's right there as well. So I wouldn't exclude a move back up before, I don't know, the year is over, the month is over, even up into the 94s, because it does look pretty good. Okay, to know if SMB was ever involved here, we will have to wait for the first week of December when they produced their FX reserves. Okay, but it was interesting enough to have a look at what's happening in Swiss. Dollar Swiss as well is starting to push towards the resistance here of this, call it a triangle, or kind of a channel maybe that we were in, around 81.15 there as well. If it pushes through, we're probably in for another 0.5%, maybe why not 1% move to the top side. Okay, so keep an eye on Swiss things, because they are seemingly quite a bit still. That means Swiss offered. Gold. And again, we stopped here. And if you look at what's happened already in October, cap at 41.60, cap at 41, cap at 41 and a half. Yes, we flew through, but 41 and a half, 41.4550, the prior highs here as well that we saw yesterday. We're stopping again in this 41.50-60 zone. That's an interesting zone now, definitely. Okay, this is definitely an interesting zone. Wouldn't it be only for the intradays? But again, stopping here may mean that we continue to mooch around in this triangle, wedge, channel, range. You call it as you wish, but this is quite interesting where it stopped yesterday. So I was long, played this break here as well, and then I took most of my well everything off right now. If it breaks above, then I think we can go back for a revisit up in the high 41s. Why not even 42? Maybe not enough strength right now to go and revisit all-time highs, but I would still not rule it out before this year is over that we are going to have a revisit of those all-time highs. I'm not really bearish on gold. Wouldn't it be only for what the price action is it's telling us? If we get a move back down under 41 towards this 40, 60, 70, I might get interested again. Silver, interesting, right? Again, we couldn't get towards the prior high, but it's not finished. We're still above 51. But it would be something could be happening like this if this pattern continues, which would then maybe bring it closer to 47.5 from where we are, from where I'll be getting interested again. Obviously, if it breaks above 52.5, all bets are off, and then I think we are going for a retest up here. But for the time being, this is looking like a pretty interesting picture with a bit lower highs here. We printed already 3 lower lows. What's it gonna do here? It's going to get pretty interesting, I would say. Somebody asked for the Aussie dollar. We're a bit stuck here, but obviously we will have the CPIs out coming night, right? So Aussie is trading at 64.5, bang in the middle of this little zone here. 64.70. We just stopped around there, that broken trend line. So that's your first level to monitor going into the CPIs coming out a bit later, and then obviously these bigger. From 64.25 down to 64.05-ish, 64 to figure a bit psychologically, that's going to be an important one. And we know, as we are already spoken about it on the top of the show, we know how the RBA is reluctant to cut more right now, but a weaker CPI will probably take them over the edge. Okay, so if we get a weaker CPI, I firmly expect this 64.0525 to come under pressure, okay? And obviously the opposite is true as well, depending on what the dollar does, because it's a bit of a picture could be a bit twofold here on the dollar. Month-end models are not specifically calling for dollar sales, but anyway, a sticky CPI, and then maybe you look more at stuff like Euro Aussie or Aussie Kiwi, depending on what the RBNZ does. Could get back up closer to 65, but we know also that if it rallies on a hotter CPI, this 65 2030 to me is going to be a serious hurdle there as well. Okay, Kiwi, and I'm just sticking to the Kiwi dollar here, Derej. Kiwi yen is yeah, I mean, if you have a view on the yen, a view on the Kiwi, you could have a view on the Kiwi yen. The yen is doing a bit better, although it's losing a little bit of steam right now. But I'm just going to look at the Kiwi dollar, and that's going to give you your your indication for what Kiwi yen may do after the RBNZ, right? It can't hold a bit. If you look at where it stopped already, no, I actually wanted to leave that. Ugh. Okay, what are you doing? I want to leave that at prior loader. If you look at what's it doing here, you zoom in a little bit, those bounces are anything but encouraging, right? We first had a bounce up to 56.40, which was the level when this was the low. Then we had the bounce could reach 56.20. So depending on what the RBNZ does tomorrow, this thing could be on the move. But I would still argue that since they will probably cut, it's going to have to be extremely hawkish. That's my view. It's going to have to be extremely hawkish to yeah, you can get above 56, 30, 40. But what's going to happen here? 56, 65, 70, 56, 90 figure. Those are already, in my opinion, going to be serious hurdles. Those are already big moves, by the way, percentage-wise. If you get up to 57, that's a nearly 2% move, right? But so I don't even think that it could be in there, even if they are very hawkish. This is still a picture that looks very, very bearish to me, unless we start to break above those zones, and then we will see what happens there. But I wouldn't be surprised if the RBNZ isn't hawkish enough that we are going to have a look down and again retest the next low of this one here, this line in around 55.5 maybe. But I wouldn't even exclude before the month is over that we are going to see a test of those prior lows here again, which are low 55s, high 54s. It's just looking so awful. Only, as I said, if it moves above this 65.95 zone, I'm probably going to change tag. But for as long as that doesn't happen, why change anything to the outlook? This is really, really still very, very bearish. And with that, Ryan, back over to you, mate.
Thank you very much, sir. And that'll be done for the day. That's enough of enough. Thank you, everybody, for coming to the Flow Show. As always, you can catch us all on Face a bit later. Have a great day trading. Take care. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.